Good morning. Here are the daily news summaries presented in a clear, listener friendly script. Each topic is rendered in English and condensed into 3 to 4 lines while preserving the original details. Topic 1: Fresh Iran strikes. Possible U.S. military operations and incendiary comments about Kyiv amplified geopolitical risk. Yields fell after the Memorial Day break as rate hike expectations eased. U.S. forces carried out additional strikes in southern Iran, citing self defense, targeting missile launch sites, attempts to drop naval mines, and vessels. Iran warned of retaliation and claimed airspace incursions by a Micron and F-35 aircraft. Russia repeated threats of large scale strikes on Kyiv and urged foreign nationals and diplomats to withdraw, adding to geopolitical uncertainty. These military actions and provocative statements have amplified geopolitical risk. Despite tensions, bond demand after the Memorial Day holiday pushed yields lower. The 10-year U.S. Treasury yield fell to about 4.504%, the 2-year to about 4.07%, and the 30-year to around 5.03%. UK gilt yields also declined amid eased political uncertainty and hopes for U.S.-Iran de-escalation. Oil showed high volatility with Brent near $99, which shifted inflation expectations and Fed rate path bets and helped drive the recent drop in yields. Investors will watch key data like the Fed's preferred PCE inflation gauge and any progress in peace talks. Topic 2. Stocks trade near record highs but face a fresh test from rising bond yields, highlighting sensitivity to interest rate dynamics. The S&P 500 has risen for 8 straight weeks and sits near record highs, but gains are concentrated in a few large tech AI names. Market cap-weighted S&P is up about 8.6% since the war began, while equal weight is under 1%. Treasury yields, especially the 10-year, have climbed to levels not seen in a year, about 4.34% at end March, roughly 4.56% recently, creating a test for equities and signaling bond market risk to stock valuations. Drivers include potential Strait of Hormuz disruptions pushing oil toward $100, worries about a protracted conflict, and sovereign fiscal strains that lift inflation and hike expectations. Rising yields raise borrowing costs and pressure growth stock valuations, with consumer and auto loan delinquency signals as added concerns. If higher yields reflect stronger growth, stocks might endure, but if they reflect surging inflation, e.g., core CPI accelerating above 3% annually, increased rate volatility could hit equities. Short-term peace progress or oil declines have already shown they can pull yields down and support stocks. Topic 3. BP ousted Chair Albert Manifold over serious governance and conduct concerns. BP's board immediately removed Chair Albert Manifold, citing serious governance, oversight, and conduct concerns without publishing detailed specifics. Multiple sources reported repeated aggressive and unacceptable behavior toward colleagues, with whistleblower reports documenting a pattern. Senior Independent Director Amanda Blank acknowledged Manifold's role in driving change, but said the board was disappointed and acted decisively. Manifold had taken the helm in October 2025 to refocus BP's strategy toward oil and gas and away from some renewables, and he led leadership changes including the installation of CEO Meg O'Neill. The stock plunged intraday by as much as about 9% before recovering some losses. Ian Tyler was named interim chair, and the board has begun the search for a permanent successor. Investors and advocacy groups are demanding transparent explanations, and stakeholders stress the next chair must bring strong expertise on governance, climate, and transition risk. Topic 4. Ferrari unveiled its first all-electric model, the Luce, marking a high-end push into EVs. Ferrari revealed the Luce, its first fully electric model, a large 4-door, 5-seat luxury car with roughly 600 liters trunk capacity and a curb weight above 2.2 tons, built on a new battery-based architecture.